Hello everyone and welcome to a new ATFX video. My name is Gonzalo Canete and I'm here one more time with you to give you the best update related with financial markets. In this occasion, the topic is inflation in United States. I have prepared a presentation with all details and all variables affecting inflation to analyze exactly what is going on in inflation further than the topic, the news, financial news just mentioned, if we are or not in trouble, what is the posture of the Federal Reserve, what is the evolution of the numbers, and also finally, what is the evolution of the price in particularly three markets: cable, GBPUSD, Euro-dollar, and also gold. So hold yourself and enjoy the video. First of all, before we start, as always, please give me a thumb up if you like the video or you like the content. Also subscribe to the channel if you are not, and click on the bell if you want to receive notifications anytime I upload a new video with new updates. Is inflation making a comeback? Why I'm making this question? Basically because if you follow the numbers published by US economy, you will see that most indicators related with inflation seems to be rising back again, and that's a big trouble, especially with the Federal Reserve promise of cut the interest rates and how this actually is affecting the evolution of the dollar value and therefore the euro dollar, the GBP dollar cable, or even the gold value. There is 2 points that we need to discuss when we talk about inflation. Fed's mixed signals on tariff inflation. First, traditional view, tariff rise import cost. During the last months, we have seen Federal Reserve mention over and over again that the tariffs applied by Donald Trump on the trade could actually increase the price of the goods on the stores. It actually works as a kind of a tax on the goods, is increasing the value or the price of those goods imported in the United States economy, and therefore it will cause an inflation effect on the products on the stores. That was the promise by the Federal Reserve. They have been insisting on this point many months, and now we can see that suddenly, out of the blue, Waller, one of the most influenced members of the Federal Reserve, mentioned that, well, maybe this is not that important. Recent statements don't play tariff impact, suggesting limit pass-through effects. So now, because of this massive pressure on Federal Reserve to cut the interest rate, it seems that this is not a problem anymore. The tariffs is not an inflationary problem anymore, and therefore Federal Reserve seems to be more open to the option of cut the interest rates in United States economy, which is obviously will be positive for Wall Street, but we need to study what will be the effect and if it's true or not that inflation and the tariffs are not related anymore. I also had a warning here. The Fed makes messages on tariff impact suggest internal disagreement on inflation risk. What is the truth about this? We will analyze point by point. What if they are wrong? What if they are misleading the inflation measures at the moment? What if after all they have been insisting with the risk on new inflation? The inflation is actually true, it's actually real, it's happening. Regardless what the Federal Reserve is mentioned, regardless what the last week statements they did saying like, well, tariff seems to be not causing inflation in the way we are expecting. Really, let's check the numbers. This is basically 4 different indicators of inflation. First of all, we got on the top left corner, we have price index annual change, which is the annualized inflation, the standard inflation measure, which is 2.6. and it still is below the 2.7 that it was published on March from February readings, 2.7, now it's 2.6, but still we can see that it's not descending, it's not reducing the inflation, it's increasing or at least keeping in a kind of sticky inflationary position right now. 2.6 on the standard inflation. We also have the core inflation rate, which is also rising to 3.10%. Core inflation has, we mentioned this core inflation many times when we talk about inflation, because it reflects the inflation without those goods that actually can cause volatility in the inflation, which is energy, which is food. They remove those ones to see what exactly is the inflation levels, and it's 3.10, far above 2% Federal Reserve target. So again, core inflation is not telling us the inflation is gone. Now, US PPI, which is the index price on production, is also rising to about 3.2%. And that is also a matter of concern. Why? Because if the prices on production are increasing, the final price of the goods will increase as well. And finally, one of the indicators, the ghost indicators I usually follow and use when I'm explaining inflation waves, it's this one, Baltic Dry, which is measure the cost of exportation of goods on maritime BS, right? If you export any product through the seas, over the seas, this is the index to reflect the cost of exportations over the seas. If this index is rising, inflation is back. Simple like that. We can see also that it's a kind of bullish figure in this chart, and therefore if it's breaking up about 2.4, definitely we are again in a future inflation readings coming back after all. Now, what happens with the assets? We got gold, we got silver rising, but we have oil in a kind of lateral movement, even below the last equatorial minimum levels, around 68 in the case of Brent, $68 per barrel. Is below that level, and therefore this is not clear completely. This is a kind of gray line. If oil is not rising, it means the inflation is not exactly there. There is a chance that inflation is not back if oil remain low, and that's what United States is trying to do, keep the oil low. Now, coming back to the assets I promised to you today, which is euro dollar, we can see there is a clear evolution of a bullish euro dollar. Euro is rising against the dollar, dollar seems to be weak, and the target seems to be around 1.2250. Still, I will say we are kind of a pivot price pivot point right now in 1.1750 approximately, because there is a chance that at these levels maybe the euro get weaker than the dollar for a while and retrace to 1.1250 more or less. But still, if it's breaking up finally the level of 1.1750, which is a kind of the resistance, the short resistance, we probably will move to 1.2250, which is the next target, and it's clear on the chart. If you take a look on this chart in long term, you will find that actually we are in a kind of exceptional movement, and the long term is giving us a bearish euro dollar, and therefore sooner or later dollar gonna get stronger than euro quickly. In pound is exactly the same thing. We have this bearish figure here indicating a potential movement down on GBP against the pound, against the dollar, sorry. We also got the dollar index falling under 100 points, and therefore indicating a bearish movement as well, weakness in the dollar, and gold rising. Spot gold is rising, keep rising. Pay attention to this movement. If you see the gold rising, you can also see the dollar index falling, and this explains in summary what is going on with euro dollar, GBP, and gold. Dollar is getting weaker. Federal Reserve is applying a policy that probably the coming weeks is going to make the dollar even weaker than that if they cut the interest rates, and therefore the gold is rising, and every single pair of important currencies like the euro, like the pound, like the Swiss franc, probably they are taking new advance on the dollar and moving bullish against the dollar, but in short or middle term. Pay attention for the long term, because surprises could come if dollar recover their strength. That's all. I hope you enjoyed this video, and remember, if you really enjoyed the video, give the thumb up and subscribe the channel, click on the bell, and see you in the coming reports. Bye bye.